Retail sales in Canada have come in line with expectations. They slipped 0.1% in August as expected. There was a second straight month of weakness in motor vehicles and parts. We still have Mike Vinokur, portfolio manager at MV Wealth Partners with IA Private Wealth. Thanks for sticking with us, Mike.
Pleasure.
And we're also joined by Carrie Freestone, economist at RBC. Carrie, great to see you, and thanks.
Thanks.
No great surprise, it seems, in these retail sales figures, but your take is that consumers have begun to cut back, pare their spending.
Definitely. So, one thing that's price growth, we're in a situation where price growth is masking the real trends that are playing out here, right? So even though nominal spending is down by a tenth, real spending fell, real retail sales spending fell by 0.7% in August. And that's very much in line with our own RBC cardholder data. We're starting to see, any strength is very much in essentials. So our own RBC consumers spent 10% more this year than they did last year on essential items. And if we look at the retail sales data that came out by StatCan today, we can see that there's strength still in gasoline spending. But inflation is really masking the trend because even though gas sales are up 2.8% month over month, if we look at the real spending or the volume of spending, it's down by almost 3%. So really, we are starting to see a pullback. We're
looking here now at the numbers for August. People are cutting back on sports, spending more at gas stations. And that's interesting, spending less at on food. Have we seen a moderation in food inflation? Can you remind us?
Yeah, we definitely have. So we actually just got the data for September, and inflation has fallen to 5.8% year over year, which is still, well above the Bank of Canada's 1% to 3% target, but down significantly from a month ago, and actually the lowest year over year price growth in a year and a half.
Amid all the griping over grocery prices, we should remember other countries have had huge food inflation as well.
Yeah, it is very much a global trend that is taking place, but we are starting to see it come down, so that is a welcome trend.
Mike, what is your take on the retail sector in general? I know that obviously that's a very broad question, but are you interested in retail names right now?
Yes, we do hold some retail names. Carrie and I were actually discussing before the segment, and she actually mentioned something that I thought was very interesting, which is that Canadians actually have a lot of cash. In fact, she was saying $350 billion?
In Canada,
in Canada.
Savings.
That's a lofty figure. So perhaps consumers in Canada and Canadians in general, who have generally always been more cautious in their stance in terms of investing, spending, whatnot, perhaps they're being more cautious and in fact have this hoard of savings that they could accelerate spending on once the smoke clears, if you will.
But don't we have very high household debt levels, even compared with many other countries?
We do. That's the balance here. The World Bank, the IMF have all been reporting how, debt to disposable income is extremely high in Canada. Absolutely. But you know what? We have a low unemployment rate. We have other levers happening. For example, our resource sector is firing on all cylinders, especially now. And if you look at bond yields in Canada, they're trending down. They're actually below the U.S. Government bond yield. So maybe, just maybe, with this hoard of cash, with unemployment low, with government spending still okay, we'll muddle through this.
The economy, right? And people always feel miserable about the economy, of course, but generally, because the newspapers emphasize the bad news, the media do, but generally, is the Canadian economy okay right now? So
I would say we're on track for a mild recession this year. So it's not going to look anything like we saw in 2020. And the reason for that, or part of the reason for that, is we've posted exceptionally strong population growth in Canada over the last year. Our population grew by 3%. So even though, on an aggregated, even though on a per capita basis, we're seeing a pullback in consumption, on an aggregate basis, basis, it was flat for quite some time, and we're just starting to see it trend down a little bit. Also, as we mentioned previously, there's a large share of households that are sitting on this surge in pandemic savings, and that will insulate us a little bit. But the unemployment rate has risen by 0.5% from basically April to July of this year. And in that situation, we typically do see that followed by a recession. So it does appear that we will enter into a mild recession, and we actually think the data will show us that we're likely in one right now. The Bank of Canada's 475 cumulative rate hikes are starting to impact households and will continue to do so into next year. But once we start to see cuts, we do expect that things will bounce back a little bit.
You do this research, you judge what people are spending on credit cards. Of course, it's all anonymized, et cetera, but it's really fascinating. And you have seen a pullback in travel.
That's true. One area where we're seeing a pullback that the retail sales data by Stats Can does not capture is discretionary services sector spending. So you're right, travel spending is pulling back, and also restaurant spending, which is almost surprising because that's where we had the record pent-up demand earlier in the year. But now, since August, we've seen a pretty stark pullback in restaurant sales, and that's on a nominal basis as well, so not even adjusting for inflation.
Mike, we're tight for time. You have an interesting stock idea here related to interest rates. Because Americans have these long mortgages, in some cases they're reluctant to sell the house because they'd have to refinance at a much higher cost. So Pulte Homes, the home builder, you think offers value here. Tell us about that.
Yeah, Pulte Homes is one of the major home builders in the U.S. And what's interesting right now is, as you said, home resales have really slowed down because nobody wants to sell their home because they don't want to give away their 3.5% mortgage. So one of the only avenues to purchase a home is new builds. Pulte is, in our opinion, very cheap on an earnings basis. PHM, yes. It's got very low net debt, buying back stock, and is in great shape for the demographics to continue with the demand of new home building.